Perfect. All right, guys, this is David here from Forex Empire, and today is Sunday, March 25th, and I'll be going over some of the swing trades for the week and for the month and for probably the next 2 months also. So keep that in mind. All these trades are long-term. They're nothing called short-term for me right now. If you want looking for a short-term trades, I would say come back Wednesday when I'm going to be doing the weekly reversal trades on Wednesdays. But for now, we're going to be looking at swing trading for the week. What I mean is you're going to be holding this trade for a while, a week, 2 weeks, 3 weeks, anywhere from 1 to 8 weeks. But tonight, this is something that I'm doing for everybody. So please pay attention because you will never learn this stuff somewhere else. So moving forward, the first thing I opened up was USD CAD, and the market maker method works like this. There's only 2 patterns that you always need to remember. There's not thousands of patterns, just like technicals. There's head and shoulder, there's trend line breakouts, support resistance, multiple things, harmonics, Elliott waves, etc., etc. But now in technical, in market maker method, there's only 2 things. Right now you're looking at MAAW, WVVM. So what I mean by that is a pattern. This is a pattern that a lot of people understand it, but at the same time they don't. So let me identify you the patterns so you guys can see what I'm talking about. So this is an M right about here. You can see that M with the divergence. M is always have to have a divergence. If you don't know what a divergence is, please do go to YouTube or babypips.com. Right about here, babypips.com/school or /learn. This is the course that you need to finish in order to learn the basics. But I'm not going to go in deep details on those, but I'm just going to go into advanced. I'm trying to finish it as soon as possible. Probably going to take 30 to 45, maybe an hour, because I have to go through all the 31 pairs. So stick with me. At the end of the night, after I'm done marking up, after I'm done giving the analysis, after I'm done giving the signals, then you can ask me questions. And what I'll do in the chat room, I'll open up a chat room. If you go to the right, you're going to see a chat room. So make sure to go in there and ask me a question at the end of the webinar. Please keep that in mind. Do not draw on the screen. That would be really appreciative. But moving forward, right now, let me get back to the teaching. So this is an M. Level 1 is right about here. That's called A or level 1, okay? And then there is a level 2 right about here. That's called another A or level 2, consolidation. These are the consolidation boxes. You probably might have seen it before, but when the price goes sideways, you mark it up, and that becomes your consolidation. Now, the very bottom, what do you see? A base as a support. A support can be a peak formation, M or W. So this was a resistance, this is a support. Now that's an M, this is a W. So let me mark that up. So you see how that pattern played out. MAAW right here, MAAW. Next is WVVM. So what I trade is this. To be a beginner, you draw a trend line, you wait for this breakout. The moment the price breaks out, that's your buy. Right about here, that's your stop, goes under your stop loss, under your support, that's your take profit. Guess what? In a few days later, it took how many days? Actually, I can't tell. Let's see. Right about there. That's around, how many pips is that? Profit, 500 pips. 500 pips, guys. This is swing trading. That's what I'm saying. Like 100 pips is nothing. Okay, you need to give a room to breathe. Right about here, the stop loss is at 13. Let's see, 130 pips, 140 pips around that level. So let's see, 1400. Exactly. So think about it. Like you're risking 1 to 3 risk reward. It's well over 1 to 3, and that's good. That's a good sign that you're trading in a better risk management and risk reward. So once you got that done, your take profit got hit, you made your money, you're out of the game. Now, next thing is counting the other level. This is the level that I traded from here to all the way here. That was my book profit. And now I'm going to be trading the other side. because I waited because the market can go and do whatever it wants to do, but I'm gonna wait for my pattern to finish. My W, next is V, that's a level 1, and then there's next is level another V with a level 2. So now next is WVVM. This is an M. If you guys can see what I'm trying to show you, it's an M, and right about here, right? So there, that's a divergence. It's not a proper divergence that I look for. I look for divergence like this, pointing it down, making lower lows. This is the price makes higher highs. That's a proper divergence right about here. This is not an idle divergence, but since it broke the trend line and it's going back down, I see it that it can be a head and shoulder. It can be just straight down. But right now, since it's an M and all that, it already did the thing that I was looking for. I waited last week, the whole week, for this to happen. Now finally it's happened, and I'm gonna take a picture. Like, let me see the picture real quick. All right. So moving forward, what is this? What is how you trade? Once you find a pattern, this is what you need to do. Find a sell, and you're probably gonna be selling right about at the market execution, right about here. Your stop loss goes above the high, so the market never comes and hits your stop. You always gotta be away from the reach of the market maker who tries to come back and hits your stop. Now, drag it all the way down. That's your zone, right? That's your support zone. Just drag that up. Now look at it. Risk reward is 1 to 2, right? 1 to 2.2. I don't like that. I like 1 to 3 risk reward. My stop loss is 270 pips. I don't like that either. I'm gonna make it 2%. Let's see, 1 to 2. That's perfect. Now I'm gonna make my take profit 600 pips. Take profit. Now see the risk reward how I edit it. Now 286. I'm gonna make it into even number. That's gonna be the last zeros, and then perfect there. That's my 1 to 3 risk reward trade sitting at you and looking at you right here. If you lose this trade, you will lose let's see, 2% on a $100 account. I mean, I'm not even considering, like, you should not be trading with $100. That's for sure. You should be trading with $1,000 and doing 0.01. When you do that, you're risking 200 pips. That's 2% risk on your account. Nothing much major, only 2%. But if the price goes down, guess what happens? You make 6%. 6% on one trade. And I'm talking about 31 pairs that's sitting and staring at you on the MT4 that you can trade every single day. All right? So this is the signal, guys. This is the signal that's the stop loss is 30.60. And basically, let me give my signal to my clients also, and then let me go back to you guys, okay? Copy. All right, page. Okay, sell USD CAD. And another thing, risk management. Risk management is, let's see where it is. I don't know if you guys can see it. Let me see if I share the page. Oh, Safari. All right, you guys can see this. Okay, now, see the risk management? 1% risk per trade, or 0.01 per $1,000 in your account, and 1 to 3 risk reward. It can be more, your take profit can be more, but always make sure it's always 1 to 3. That kind of gives you a better, you can be wrong 3 times and make it 1 right, and you make your money back. That's how I see it, okay? So you don't have to be accurate, but guess what? If you're accurate, good for you. You're gonna be making more money. That's all. So moving forward, let me give out my signal for a second. USD CAD. So I'm gonna be giving signal at the same time. I'm gonna be doing analysis also. So keep that in mind. Just to give me like few minutes to type in all those orders, okay? 1.360. Take profit is 1.22600. That's it. Done. Okay, now, but this is off. Actually, I started off a little bit on the wrong side. Let me see. USD CAD. How do I, what? That's odd. I think I already in it. I think I already in that trade from last week. I'm not sure. Let me see, USD CAD. Yeah, I'm already in from last week, guys, I think. Yeah. Yep, I'm already in. So I'm already in this trade. So before I even called it, I'm already in. That's funny. Okay, now moving forward, I'm gonna start from the very alphabetical order. So AUD, and then Euro, and then GBP, and then CADs, and then NZD, and then USD. So it's gonna be a 30 pair that I'm gonna go over. So give me a second and let me work it out really quick. So let's start with AUD CAD. All right, AUD CAD heading its way down, just like expected, from the 78.6. I was pointing it down, but I forgot to check it. So we're gonna be waiting. We're not gonna chase a trade since the price already moved. I mean, I was supposed to sell right here, 240 pips. So what are we gonna do? We're gonna wait. I'm gonna wait for the price to go back up and then retest this level. The moment it retests this level, then I'm gonna look for a sell again right on that area. So let the price goes up, and this is my zone. Probably right about here, that's when I'm gonna sell it. Until then, I'm not touching it. This is a WVVM right here, guys. And right here is another pattern, probably on a bigger time frame. M, level 1, level 2, a W, level 1, level 2, M right there. It's repeated. It's repeated every single time, but it kind of fades away after some time. Then you look at the other pairs. That's all. There's 31 pairs that you can work with. So AUD CAD, no sell limit. You just wait for the market to push up and then you trade, okay? Now, AUD CHF, let's see what we got. All right, AUD CHF on a daily time frame. All right, W level 1, level 2, M formation, level 1, level 2. So still it's in the level 2 zone, right about here. It's still in the level 2 consolidation, right there. I don't need the Fibonacci right now, but I was expecting the price to go back up, but it kind of used this as a support and a resistance right about here. There, that's the zone it used it to reject. So now we're looking at this breakout. So it can possibly make a lower low right here, or it can make a W and then push back up. But I'm just gonna wait for the W to finish and then I'm gonna get in. But it's a daily time frame, so I'm giving it probably a month or two. Okay. Now AUD JPY. All right, AUD JPY. I'm already in this trade from last week, I believe. W level 1, level 2, M formation, level 1, level 2. Now there's a W, not a clear divergence, but there is a divergence right here with this right here. And the price is respecting and it's going back up. So I'm gonna let it play out, let this go up more. So right now, if you want to be conservative trader, this is what I would suggest. Right about here, you just draw the trend line and wait for the breakout. That's all. Wait for the breakout, and the moment the price breaks out, does a retest, you can get in. If not, that's a huge one. Right here is a short one, right about there. That's a trend line breakout. So if the price breaks out this level, the first level take profit you're looking at on AUD JPY is right about here. That's the first resistance zone. This is the resistance zone that you're going to be looking for take profit breakout, take profit. And then the next is, if you're trading based on this, then you're going to be looking for a take profit there. Okay. All right. Now next is AUD NZD. All right, 80 NZD. Level 1, level 2, level 3, all these counts are right about here. W, level 1, level 2, information, that was a bottom. That's level 1, that's level 2. It was kind of sketchy, kind of didn't trade it, I think. And then I left it all alone, and then I traded the W right at the divergence. Hold it all the way to the top right here. But the price has made the A-top. A-top is something that I don't trade, and that's the reason why it's like a lot of times I get stopped out, because A-tops are very hard to trade because you never know if the market's going to go back up or is going to respect your pattern. So that's why I tell everybody just stick with W's and M's, because those are the easy ones. In a technical point of view, M and a W is basically a double bottom, but a double bottom consists of a stop hunt. That's what you don't learn on technicals. For an example, here, right about, let me stretch it out so you guys can see. So double top, double bottom on a technical analysis, it's good, but you're getting ripped off from the trader, from the market maker. This is how you do it. Right here, if you guys took this as support, the price went up, you're here, you're looking at this, you know what, you're waiting for the price to come here and then buy, right? After this wick, you probably expected the price going to go up, you probably bought it right there, and you put your stop right here. The broker pushed the price down, hit your stop, gathered all the orders, and then pushed it back up. Came back again. If you had a break even, if you bought it right here, if you had a break even, guess what? Touched it again. This time they pulled it really hard. They pulled it really, really, really hard. You know, they never gave you an option to get back in again, because that's how greed works. And there's a MMM pattern right about here. If you, I kind of missed out, but there. And let me draw it out really quick. There's level 1 consolidation. That's a level 2 consolidation. And that's a W right here. And that's an M right here. And I think they both have, yeah, this one doesn't have the divergence, but this one does. This one has a divergence that's making lower lows right over here. Okay, that's right here is a smaller term. This is 4 hours. This might be an hour for a whole week, and the next week it dropped. But then it didn't respect, it can go back up. So that's why, like, when you trade from the very top, this is my entry gonna be. If I looked at it, this one, my entry is right after this stop hunt. This wick indicates that the broker did the damage, and now the price is gonna shift. Guess what happens? 2 candles, 3 candles, boom, done, gone. They took their money. They took your money and they left. And then they dropped. You can break even over here. You can book 100 pips, 200 pips, whatever that price was. Let's see, from here to here, that's in 193 pips. 100 pips, probably in I don't know, like few hours, probably a day. You made your 100 pips, you're done. You can break even. It doesn't have to be a winning trade. You broke even. The price went down, stayed down, and then went back up. Hit your break even stop right about here, right about here. But no biggie, you got it right. You counted your levels right, but not every single time gonna be a winning trade. You have to accept, if you're not big enough to lose, you're not big enough to win. This is the motto that I go from. Like, you need to lose in order to win, and it applies with life, that applies with trading, everything. Okay, so now moving forward. So on a daily time frame, this is the expectation that I had, and probably I'm gonna get back in again after I do a little bit more analysis. That was probably a 1%, 2% risk that I take and probably got stopped out. But guess what? You learn from your mistakes, or you correct your mistakes. That's all. Now on a daily time frame, let's go. That's a top, that's a W. So we're waiting on, let's see, Fibonacci levels. Let's draw it out and see where the Fibonacci's are meeting up. 61.8, 78.6. So most likely 78.6 is the one that I'm going to be looking for for a reversal, because right about here I can see a harmonic pattern. Okay, let me see. Right here, that's a harmonic pattern right there, or 88.6. So all we gotta do is just wait it out and see how the market plays out. Okay, style 88.6, 61.8, 88.6. So these are the levels we're gonna be looking at. Okay, once the W, this is a W right here, but this is gonna be a stop hunt, most likely a hammer or engulfing candle, and then you should know that the market is ready to push. This is in the zone right now, but kind of entered on this first leg, and this is the second leg, but this is the first leg, and this is the whole shebang. So a lot of times you count the levels wrong, but once you train your eye to find the pattern, you will spot it really quick. So I'm gonna wait for here and then rise up, and then the divergence should be available right about here, like that. Okay, and then the divergence over here should be looking like this. Okay, lower lows on a price and higher highs on the buys for the buy. There. Come on, there. Okay, so let's wait it out for the 78.6 to get hit, and then see if there's an inverted reversal candlesticks like this hammer on a buy, probably like this. All these indicators are basically engulfing candles, railroads. All these are the ones that indicates that the price is gonna go down. Right here, this is an indicator. That's a hammer. That's a hanging man right there. Dojis, hammers. All these are indication that the price is gonna go down. This is the one that I look for right here. This one or this one, I want to look for here. Basically, if the price creates here, I'm buying. I don't just go buy 78.6. I wait for the price action to tell me what the price is about to do. Or if you want to be conservative, conservative means like taking your risks slow, not be risky. You can wait for the trend line breakout. Once the trend line breaks out here above the 61.8, guess what? You can buy all you want. But would you prefer to enter here, or would you prefer to enter here? Of course here. But wait it out, learn it up, and then you should be good. Okay, moving forward. AUD is done. Now we're going to be jumping on Euro USD. Euro USD on a 4-hour time frame. Okay, there. So currently the market made the W level 1, level 2, extra level, but that doesn't count. And then M is right about here, and the divergence is right about here. But now the price has made the base, and it created the level 1. This is the level 1 that I'm counting right now, and it's still in the consolidation. It's been in the consolidation for like a month now, the whole consolidation. But you can see the price broke out, did the retest. If you were a trader, come on, guys. Okay, thank you. Oops, I did it again. Hold on. Clear all drawings. Okay. Okay, perfect. So now, basically, these are the level 1s, right? So now, all you gotta do is wait for that zone to break through. It can go up, it can go down, but when it goes up, guess what? All these count doesn't matter anymore. W level 1, level 2, the extra level, the M doesn't matter anymore. The pattern is not valid the moment the price breaks this high. That's why my stop loss is up right here. My stop loss is right here. If it breaks through, if it touches my stop loss, that trade is not valid, and I'm not trading it until I see another good basically, how do you say, another good pattern. Because there's 31 pairs. I can be picky as hell. I can be picky. There's 31 pairs. You should be picky. You're only gonna trade, if you can trade, only trade 1 pair a week, and you should be good. You know, 1 pair, 100 pips, 10%, that's good for the week. Come back another week, make another 10%. Come another week, make another 10%. For the month, you're already looking at 40%. You know, just 100 pips. But that's some other story that I can go on. But Euro NZD is the next one, and we're looking at here. and probably I'm gonna go back in on a sell again since it can't stop me out over and over. So we're gonna be looking at Euro NZD on a daily time frame right about here. Let me mute guys, mute all. Okay, now what do we see on a daily time? A lot of times you have to go through multiple time frame analysis just to see what's going on. And as you can see, what do you see all this? This is an indication that the price is exhausted and the price dropped, right? Right here is the resistance. The price couldn't handle. Now it's making a drop. This is the moment that you're looking for to enter and put your stop above. A lot of times you might enter too early and get stopped out, but next is basically you get scared to get back in again. That's the problem. You have to know what's going on and why they're doing it, because you don't have control over it. All you can do is play around with it. Now look at my risk reward. Look at my risk reward, guys. 8.6. That's well over 1 to 3 risk reward that I was talking about. My stop loss is 2% risk, and my take profit is 1,600 pips. That's what I'm saying. 1,600. I mean 1,650 pips. That's how much the pips are. 60, 90, 69, 70. Let's see. This one I'm gonna make it 9, 69. There. There, perfect number. So make it even. 200 pips stop loss. 1,650. 1,650 pips take profit. That's the long-term trading. And guess what? I'm waiting for the trend line breakout. The moment it breaks, you can wait for the trend line breakout and then jump on it. But my stop loss is all the stop loss, the major stop loss should be right about here, to be honest. But I don't like to go over 2% risk. But this one is 5% risk. I'm not taking it. I'm gonna give the market the lowest it can take from me. That's it. You know, the lowest, I'm gonna make it 670. Let me see, 1.7. There, it's better. Okay, so now 650, perfect. So look at it, guys. This is like a perfect setup that you can't miss. Yes, it might be not the perfect time. Like you can wait for the breakout, you know, you can wait for the breakout, but guess what? Look at it. 61.8 is getting hit on the resistance zone. On the resistance zone. This is the resistance, 61.8 getting touched one time, twice. Now you just gotta sell. Okay, so we're gonna get out a signal out right now. And this is a mega swing because it's a daily time frame, but still 1% risk. Okay. Okay, Forex Empire is done there. Okay, let me give this 7. Okay, 1 second. Let me clear that out. 1, 2, 3. Okay, now sell. There. All right, so Euro NZD. Let me see, I can share this. Perfect. Euro NZD Stop loss is 1.72000, and then take profit is 1.53500, and then analysis done. Okay, Euro NZD, that's it. That's it, guys. How hard was that? Like literally, it wasn't hard. Okay, next. Euro NZD is done. Now Euro AUD. Okay, Euro AUD. Let's see what's going on with this one. All right, W level 1, level 2. There's another consolidation. That was a breakout, but this was a fake breakout. So a lot of traders, technical traders, they're probably going to be selling this trade right about here after this. They were probably right. They caught this, whatever that move was, but their expectation was here. My expectation was here too. But guess what? Price doesn't respect sometimes. You have to work along with it. You have to work with it. So now the price went back in the range. Now you have to do this, like this. Now this is another trend line that you're looking at. You know, this is another trend line that we're all looking at. There, there. Body to body. There, that's a 2 stop. Now the breakout happens. Guess what? That's going to be my sell. But here is a divergence. Here is a divergence. Look at this. Price made the high. Now it's making the lower low. Price made the high, making a higher high. Here is a stop hunt that's happening right about now, I believe. It's a Euro AUD, perfect. That's a 15-minute. If I go on a 15-minute, probably there's a stop hunt. Exact. Not really the stop hunt, but you can see the price has went above and this is the stop hunt that I was talking about, right about here. The price needs to go at least a few pips just to grab your order and then push back down right here. This is a stop hunt zone. This is what the brokers looked at. This is where the broker made the money, the most money they made. You know, taking your money, pretty much. You know, that's the stop hunt. But moving forward, so let's go on a 4-hour time frame. The divergence is not there. I'm not trading that. And then I'm looking at this divergence. So what is this? Probably a big level consolidation. That's it. That's all you need to adjust. Sometimes you have to adjust to the market condition. You can't be stubborn and say, oh, my pattern is right. You can be right, but sometimes the market doesn't move the way you want it to move. This was an M. You sold it. You booked your profit right about here. That's fine. But your aim was here. But you broke even trade. You had a stop loss to break even. You broke even. You didn't make money. But now, guess what? You got another opportunity to make money as long as you count the levels. You need to know where you are in the cycle to find where you are basically in the pattern. I don't know. I lost my words now. But you guys can understand what I'm trying to say. Like level 1, W, level 1, level 2, M formation, M, A, W, W, V, V, M. It's repeated. It can be M, A, W, W, V, V, M. Doesn't have to be, it can be vice versa, but there's only 2 patterns. That's it. 2 patterns. But all you need to do is count the levels. Count the levels. Count the levels. Okay? So looking at that, the price has, let me see the daily time frame. Okay, the daily time frame hasn't given me anything yet, but the 4 hour is not giving me anything yet either. So I'm expecting the price to go a little bit higher, maybe a little here, and then drop it down. So once that happens, I'm going to go for it. But right now, I'm not convinced with this. I'm not convinced. The price needs to break this zone first for me to be convinced that it's a sell. If the price breaks this zone, I'm going to look for a sell. And I put my stop here. This is how I do it. Let's show you guys really quick. That's how I'll do it. My short position is going to go here. Stop loss is going to go there. My take profit is going to go all the way down. Guess what? That's the 4%, 1 to 4. That's 1 to 4, guys. 1 to 4. But that's 1 to 4 risk reward, you know. But just wait it out, wait for the stop hunt, wait for the indication, and then you can basically count the divergence like that, and then another divergence like there, and then you should be good. And then drop. Okay. Now there's another divergence right here. That was another divergence, quite a little bit there. All right, guys. So moving forward, Euro AUD is a hot pair right now for the week. Make sure to write it down, all those stuff, like all the pairs that are ready to move, and just mark it up and wait for them to play out and then get in. Just get in, you know. So Euro AUD is done. Now Euro GBP. Let me write it down because I might forget to later on. Okay. Okay, Euro AD 326.18. Okay, Euro AD is the next one. Now, next is Euro GBP. All right, so looking over here, this is probably not a great one. Let me see, go on an hour. Okay. On an hour, this is what I looked at. M, level 1, level 2. How do I find levels? Is I find a price that's going sideways. So if you mark up with a line, take a horizontal ray, look up this price right here where the price started, and the price ended the consolidation right about here. So you grab that and trap that in a box. Just you're trapping price in a box, basically. Right about, come on, there. You're trapping. And then from here, the price broke below, the price consolidated, they broke through. You can make this one into a box too. That's fine. This one is another box also. But if you're looking at a bigger picture, this can be a big W, right? This can be a big W, or this whole thing can be a small M, a big consolidation right here. This can be a big consolidation, or this one can be a small, and then there's a divergence right about here, there, and then there's a divergence right here. That's perfect. And guess what? The price made the stop hunt right at the support area. This is a support area right here. This is where the market basically makes the reversals or whatever, right? Did the stop hunt. If you placed a buy right here, you think the price not going to come down? Yes, they do. They come and trap your order. This is the stop hunt. This wick right here was a stop hunt. And I bought in right here. And I'm just going to wait it out for it to play out. You know? Most likely it's going to skyrocket Euro GBP tonight. You know, right about here. So I'm just going to wait out for the price to play out. And at the same time, if you guys can see, the trend line had a breakout and a retest. And my entry was right here, but your entry probably should be here if you're a technical guy. And all you're waiting is for it to go up. My risk reward, 1 to 4. My stop loss is going to go when the price is broken here. When the price goes here, hits this point, my stop loss moves up, I'm break even, and I'm done. That's it. You're not going to be right 100% every time, but what makes you perfect is practicing. As long you practice, you'll be good. You'll get better at it. Okay? Euro GBP is good to go. Now, Euro CHF. Okay, Euro CHF. So I pretty much sold right about there. The price dropped, and I'm still waiting. The stop losses are break even. I'm not worried. It can go back all the way up if it wants to. But I'm going based on W, level 1, level 2, and M formation with a wedge and a breakout. Right? And then, let me put a 78.6. Maybe we might see something here. There. That's a 78.6. So we'll see if it breaks out or not. If it breaks above, guess what? I'm in the wrong cycle. Or maybe it's not the right time. You know, you just wait it out. You wait for the pattern to finish and then you enter. And then you play out your hands, whatever that, you know, whatever that is. But wait for this to respect. What happens if it drops? It just made the new high, that's all. It just made the newer high, lower high, and then it's gonna make a newer low. You know, so once the price breaks below this level, that's when I'm gonna consider this as a valid pattern. But right now, it's a valid pattern. Don't take me wrong, but as long as it doesn't break the high. My high is right here. My stop loss is a break even. I can choose to enter again if I want to. You know, but that's something else. This is a daily time frame, so it's kind of huge movement. So you gotta be careful how you trade. Euro. Let's go to the next one. Euro CAD. All right, now it's a 4 hour, 1 hour, 4 hour. Okay. Ooh. Okay. Perfect. V bottom. All right. There's a V bottom. Level 1, level 2. Now there's an M. That's what I talked about. Divergence. The price makes the lower low, the RSI makes the lower low, and the price candlesticks makes the higher high. That's the divergence. Guess what happened? Right about here. This zone is a stop hunt. This is the zone where broker did the stop hunt. All right, this is the spot where the price, and I already marked it up way before it happened. And it did the stop hunt, guess what? The price dropped. Now, this is where the technical traders are entering. This is where I would enter if I saw it last week. You know, but guess what? I'm not late to the party. I'm going to trade this one right now. You know, I'm just going to trade this one right now. I'm just going to wait it out to play out. This is a good, actually, this is a good trade. It's probably 1 to, I don't know how many pips is this. Let's see. It's 1 to 4 risk reward. The stop loss is quite high since it's a 4 hour time frame and it's a Euro CAD. So you're looking at 2% risk, 59.60. That's going to be 1100 pips. Look at there. The stop loss is supposed to go above the here. And if that's the case, that's 2.5% risk. Okay, you're looking at 2.5 for 4.4% risk. And the take profit is 1100 pips. 1100 pips, guys. Okay, now the price, can it go up? Of course it can go up. That's the reason. You're not 100%. I don't care if you're trading for 5 years, 10 years, I don't care. Nobody is 100% in the market condition. Anything can happen anytime. That's the reason why you're supposed to use risk management. The 0.01 rule. You know, the 0.01 rule per 1,000. You should be good. This is $2.50 on $1,000 account. Let's see. 0.01. Let's go to the map. Ugh. There. 10 cents per pip times 250 pips equals $25. That's $25 right there on $1,000 account. But if you win, it's quite a bit. It's definitely quite a bit. 0.10 times 1100 pips is 110. So you're risking $25 to make 110. Now, would you take that bet? Of course. You know, of course, 1 to 3 is I don't know, $75. If it's anything above $75, I'm taking it, but I'm getting way more. So you're risking $25 to make $110. It's a good trade, okay? Now, let's get back on this. All right, let's sell this one right now. Okay, sell Euro CAD. Stop loss. And guess what, guys? No pressure. Don't trade on demo. Don't trade on live. If you're new to trading, probably don't even go live for a year, for 6 months. Anything below 6 months, just stay away from the market on a live trading. Just do demo trading. Practice yourself. Get better. You know. Let's see. 1.6166. Take profit is 1.4816. I kind of don't like the numbers. Hold on. 5916, 5916, 5192. I'm just going to make 592. Okay, perfect. 617. 6174820. Stop loss, take profit, everything is set. Okay, there, Euro CAD. All right, stop loss is 1.617. Take profit is 1.482. That's it, done. Next. All right, Euro JPY. Actually, Euro CAD. One second, let me post it really quick. Okay, 592. Okay, 592. There. All right, next, Euro JPY. All right, Euro JPY on a daily time frame. This is a V bottom, level 1, level 2. That's an M with a divergence. And I call it this trade right about there. Like I was telling, like sell, sell, sell. But you can see this is so clear. Level 1, level 2, it's a consolidation. Level M is right here staring at your face. And then there's a breakout. This is level 1. And I was expecting to probably go back up. But guess what? It's still a good trade. But I can risk, since this is a day trade, I mean daily time frame, I can't risk that many pips. But it's a good trade. It's a 1 to 2 risk reward. I don't like it. That's one. My stop loss is 700 pips. I don't like that either. You know, that's why I'm not trading the daily time frame. I'm just waiting for it to give it to me probably on a 4-hour time frame. If it can give me anything on a 4-hour time frame, I'll trade it. I'll trade it, you know, but right now it hasn't. When it does, I'll trade it. So Euro JPY is done. Now we're going to be hopping on CHF JPY. All right, CHF JPY. Let's get this rolling right here. Okay, that's an M. There's a W, level 1, level 2, M right here, level 1, level 2, W, level 1, level 2. M formation right here, went up to the resistance, bounced off. I missed this. I didn't see it. It happened during the weekend, weekday, or the midweek or somewhere. But here is a chop. Here I already can see that there's a market maker method right here. This is a clean chart. This is a breakout. This is the consolidation. This is where the consolidate in, and this is the push, right? Here you mark it up all the way from here, like that. That's it. Simple. You just got to see it. When you practice, you see it. When you don't practice, you won't see this happening. But here is another consolidation where the price just stayed in one range, then stayed in this range, and then dropped it all the way till here. That's it. That's your second level. Guess what the third level is? The bottom, the W with the divergence. What? And an engulfing candle right here. Stop hunt, pins, engulfing candle. Now it's gonna shoot up. All these days, all these hours, the 4-hour candles are swiped up with one candle when the market opened. This should be my entry. Or it doesn't matter, it's not too late. We're still buying in right now. So what do you see? People are gonna be entering on a breakout and a buy, right? But guess what we're doing? We're entering right now at the very bottom. At the very, very bottom. But like I said, guys, make sure to follow the risk management, because one bad risk management gonna throw you off. It only takes one mistake and you screw up big time. Stop loss, 100 pips. Take profit, 111. Stop loss, take profit is 750 pips. My entry is at 111. That's it. That's CHF JPY. Okay. Let me give it out a signal first. Free signal. CHF JPY. Okay, stop loss gonna go take profit is 7,500, 111. Stop loss is 1,000. That's it, done. I just put this up. Now put that up. Wow, that's a harmonic scanner too, right there. Popped up. And don't think, guys, that I don't trade these trades on my account. I'm trading right when I give them out. If I'm giving them out, it means I'm trading them also. So copy. Stop loss is 1110.00. Take profit is 118.500. Done. Okay, now my stop loss is gonna be 110, 118.5. That's it. And the harmonic pattern on a smaller time frame is right here. And I'll show you guys right in a minute, probably 15 minutes, I'll show you. Hold on, not yet there. So right about here is a harmonic pattern on my chart that just popped up right here. And I think it went like this, like that, and like this. Or maybe like that, yeah, like this. That's the harmonic pattern. And 100% sure it's gonna go to this line right there, for sure, because harmonic patterns are like that. They're gonna go to the C once it makes that move to the top side there. There, that's the number. But that's harmonics, you know, that's small. But we're trading big pattern right here, big pips. You know, this is a small, that's it, it's small, but let's see, background. There. So that's a small harmonic pattern, but overall, it's a bullish trend. Now, think about it on a bullish, basically it's about to be bullish. Right now, it's bearish. The moment it breaks the trend line, that's when it becomes a bullish trend. Right now, it's a bearish trend. So once the price moves up, breaks this high, high, that's a good trade. You can trade, or you can trade now. Have your stop loss strictly at 0.01 with a $1,000 account, and you should be good. You're only risking what? $1? No, $10 on a $1,000 account. That's 1% risk. Okay, if you have a $100 account, you're only risking $1. Okay. Now, how easy is it? Rather than finding all the head and shoulder, oh, if it does this, I'm gonna do this. If it does that, I'm gonna do this. It's not guessing game here, you know? We don't guess here, we only trade. That's all I gotta say. We only trade here. So moving forward, CHFJPY. Now we're gonna go on CAD CHF. And that's an M, level 1, level 2. That's a W. That's a breakout. Everything playing out. Most likely is going to go back up. And that was a retest. And I'm going to connect the bodies. Right here. So you can see this is a channel or bearish trend, whatever you can call it. Breakout, retest, that's a buy. That's a buy right there. But guess, for me, it's still, I don't know, it's still a conflict, but it's not a clean chart. I like to trade clean chart. If the pattern doesn't show me anything, I wouldn't trade. But I see a harmonic already. Almost. It was close though, but I saw a harmonic pattern. Right about there, but okay, let me show you how I see it. There, one. XAB, and then there, and there, and there. It's perfect. And then poof, up. But harmonics are not 100% either. You know, all technical analysis is not 100%. Even market maker method is not 100%. You make mistake, you mess up a lot. But that's the beginning stage. Once you get professional, you can just come into the market, just snatch the money, and then leave like a boss, pretty much. My mentor, Steve Morrow, he does 50 lots. Just comprehend that. It will blow your mind away. 50 lots, guys, 50 lots. He catches 50 pips, that's it. 50 pips, one trade a week, that's it. That's all he does. He comes back next week. But he trades, he's super picky. It's 30 pairs over there. You can trade any pair you want, but be very, very specific. Be very picky. If you don't see a chart, don't trade it. Why waste your time? But anyways, moving forward, right about here, it is a good trade. Don't take me wrong, but it can go back up here. But let me see if the risk reward is good. If it is, then I might hop on the train, but if it's not, then I won't. Actually, it is good. I put my stop below, my stop loss, let's see, 15, okay, 150 pips, that's basically 1.5% risk. Okay, the take profit is 5.3% risk. Take profit, sorry, my bad. 7.737, and the numbers are right there. There. Okay, that's your take entry, that's your stop loss, that's your take profit, that's a risk reward of 1 to 3.5. So it's well over 1 to 3. So even though if it goes down, you're going to lose 1.5% risk, but if it wins, 5.3. There we go. Now, not super comfortable with this trade, but Okay, let me check this out real quick. Okay, that's another retest. So trend line breakout, another retest right about here. So it's an indication that the price needs to break this high. So the price right about here, that was the high it was created, that was a low. So the price is making higher high, lower lows. So this price needs to break this high, make a higher high, make a lower low, higher high, lower low, just like that. 737. Okay, so let's trade this one. It looks good. Just complicate it a little bit. Okay. Is this Harrison? No, my name is David. But all right. CAD CHF. Stop loss 0.722. Take profit is 79, 0.790. The analysis is given out, and it's going to be CAD CHF. All right, my stop loss is done. Everything is done. 737. Stop loss is 722. What? Okay, now 790. Seven two two. Okay, done. Now next is CAD JPY. You could just type it in, you can find it. Ooh, okay. I see. All right, perfect. Now, all right, guys. Okay, now I marked this up that the price will go down, do a stop hunt, and reverse. This is the stop hunt zone, right? I marked my levels up right now. There. This is the stop hunt zone. So red. There. So this is a stop hunt, but the price had made the divergence that we always look for right about here. So we're just gonna buy this right now, straight up. Like right here is the analysis that I can go back in time, doing the same thing. Peak, level 1, level 2, M, level 1, level 2, W, level 1, level 2, peak, hit the resistance, dropped it down, level 1, level 2. Now the W is right here. Guess what? It's gonna go back up, and the stop hunt is right there. That's on its way. Perfect. So let's get this started. Sorry guys, I want to play a background music, but I can't because I can't upload to YouTube because of the copyright of the music. It's kind of stupid, but but there. Okay, that's a breakout of the trend line, as you can see, but it's not doing a retest. It's just messing around right there. So let's wait. I mean, you don't even have to wait it out because this is a perfect entry. Like I would call it Gucci entry. So right about here at the resistance point, this is the resistance level, right? Now, if you go zoom into this one, that's good. Right here is your, there. So that's the resistance level that you're looking at. And that's your take profit, risk reward, and profit. Okay, there. You make interest 1,000, that's basically right over here. And that would be 2,200, 2050. So make it 2050 there. And then the take profit, that's going to be 818. And then take profit is 950 pips, guys. 950 pips trade. Okay, this is a 950 pips trade on a CAD JPY. And the stop loss goes right under the support. So the price comes down, hits that, and guess what? You're in the wrong setup. You're probably going to refresh your mind, clear all the charts, and come back the next day and look at it. You're going to see the chart a little bit differently. Okay? I mean, a lot of times newbies, they try to rush things up. They want to trade, they want to make the money, but a lot of times you just need to clear your head and come back again and look at the chart a little bit different. Okay? So let me delete all that. There. That's a divergence. Everything is good. Now we're going to trade this right now. So buy CAD JPY. Stop loss is 80550. Take profit is 91.300. Okay, done. Stop loss is 80.55. Take profit is 91.3. Okay, that's it. That's it. This is a risk reward of 1 to 7. Think about it, guys. It's a big difference. Not 1 to 3, not 1 to 6. It's 1 to 7. That's the thing, you know. So I'm gonna and another thing, guys. If you have any questions, please leave it till the end of the webinar so I don't get distracted while I'm trading and teaching at the same time. So at the end of the webinar, I'm gonna stop the recording and then I'm gonna go over your questions, whatever you guys have. Okay. So let's get this started. CAD JPY is done and loaded. Next is GBP pairs. So we are looking at, we went through a lot already. We got a few more to go. 4, 5, 6. Around 15 pairs to go, okay? Stick with me. There's 30 pairs. So CAD JPY is done. Now GBP CHF. All right, GBP CHF on a 4-hour. What is it? What are you doing here? On a daily time frame, you got nothing except the resistance, except that trend line. What do you call that? Trend line retest. Right about here. But on a smaller time frame, do we see anything? Level 1, level 2, extra level, W, level 1, level 2, M formation, the resistance. Okay, so right now, this is technical. That's it. There's nothing else. You probably might see a rejection from this point, and that's about it. Okay, that's it. That's all you're gonna see. This is this is technical. It's nothing market maker. There's no patterns in here that I can look for, and I can spot a pattern right here. There's an M, divergence, level 1, level 2. But then there's another level right here coming up. There's no W's here. And this breakout was nothing. So most likely this is not a valid pattern. So I'm just going to leave it alone. Probably if you want to trade as a technical trader, you guys can definitely draw a trend line right about there. Sell it here or wait for the rejection from that point, and when it goes up, comes back down, breaks this trend line, you sell it. You sell it all the way till the support, and the support is right here. The resistance right there. That's a good amount of pips if you're looking at probably around 560 pips, but it's not for me. That's the thing. It's not for me right now, but later on, yes, it can be. And there's a divergence also. There's a divergence right here. Perfect divergence, you know? So you guys can trade that. Okay, so GBPCH, I've got nothing. Let's see at GBP. GBPJPY. All right, GBPJPY. Okay, GBPJPY got a small harmonic pattern right there. Small harmonic in a 15-minute time frame. Hold on a minute. Wait, hold on. Got stuck now. I don't know. I don't see anything. But on a 4-hour time frame, okay, now on a 4-hour time frame, there's an M, there's a divergence right here. This is a level 1 consolidation, level 2 consolidation. But where is the W? The W never happened. The breakout happened. I'm not trading it, guys. I'm not going to be trading it this trade. It probably might go up, but guess what? It's not for me. A lot of times you're probably going to be chasing a trade, looking for one, but I'm not. I got other pairs to look after. And this right here can do this. So that's why I don't like to trade the bottoms. But here, this is what it can do. You can come down all the way and hit your stop and then go back up. Just break this low a little bit, not a lot, right here. Just a little break, do a stop hunt and then push back up. That's what I'm waiting for. I'm not gonna be getting on the bull since the market is already pushing up. I'm not. I'm gonna wait for the breakout, whatever that is. I need a W, I need an M, I need a W to enter. If I don't find it, I'm not gonna enter it. Okay? So GBP pair is another thing that you gotta keep an eye on it. But other than that, it's all good. And then GBP NZD is the one, I think like 2%, I think 2%, yeah. 2% risk, that trade, but it's still hustling. This trade has been like playing around for a minute. W, level 1, level 2, and M formation with the divergence, the breakout. This is not want to go down. It wants to do a lot of stop hunts, and it's fine. But guess what? I get better entries whenever the stop hunt happens. I don't get stopped out that much, but when I do, I get a better entry. Look at that, 78.6, the hammer right there. This is a reversal candlesticks right here. That's a good trade for me. Believe it or not, I'm just gonna drag my level up. That's it. There. Clear more everything up so you guys can see. See this? The breakout, this is the level 1. The consolidation was supposed to happen here under the support of the M, but it broke below, it went up, doing a more consolidation. That's fine. The market wants to do it. But guess what? Your stop loss is always short. So let's see, right here, your stop loss goes above. Now I get a better entry. Now the price can't even go there. If it does, the whole market maker method here doesn't apply. M, level 1, level 2, W, level 1, level 2, M. Now all I'm just gonna wait is for this to drop. And my take profit is right here. right here. Risk reward 1 to 5. That's my risk reward right here. For stop loss is kind of high. That's the thing. That's why I don't like to trade this pair since it's on a daily time frame. Right about here is 200 pips. That's still 2% risk. You know, it's a small stop losses, but guess what? If we do catch a better trade, right about here, I got in, it went up in profit, then went back up. It might do the same thing again. It can do this. This might be a level peak formation low, level 1 consolidation. It all will tell. The time will tell if this is a one consolidation 1. This can be a consolidation 2. You never know. It can go up. But right now, I trade what I see. And what I see is W level 1, level 2, and M formation. And guess what? That's my sell. It is a sell calling me that sell this trade and put your stop above. But if I do put it here, that's 4% risk that you don't want to take. I don't want to take. And that's why I put the stop right here. And it can get stopped out quick, but it will give me a better entry again. I'm going to keep trading this probably the 2 times, 3 times, and that's it. The 3rd time, it doesn't work out, I'm done. And here, 24295 202 here. And that's 200 pips stop loss. 9,500. And it's a 78.6. That's crazy. Okay. 61.8. There. Oops. There, 78.6. So we're just going to trade based on the 78.6 and based on the level 1 count. So this is a level 1 right about here. And we're just going to let it play out. Okay? Now that's a sell again. Sell GBP/NZD, stop loss will be at 1.9700. Take profit. All right, it's almost an hour more than an hour. Sorry guys, it's taking a while. Since I'm teaching also, that's the reason why it's taking me longer. But I'll try to squeeze in faster, okay? GBP/NZD, we're almost done. A few more to go. Okay, GBP/NZD. Now, GBP/AUD. All right, GBP/AUD. I was kind of expected that to happen. W level 1, level 2. Now we're gonna expect an M formation, and that's probably gonna be on. On a 4-hour time frame. You see the divergence. The price is making lower low, but the charts is making higher high. Level 1, level 2, W. I can go over and over and over and over again, but here this was not right. But I'm talking about this part. The W, level 1, level 2 consolidation, the M formation. The M is not completed yet. It needs to drop. Let's see. And here's the fib extensions. Okay. So most likely the price will reject, go back, maybe go back up like this, and then go back down. But there might be a resistance zone. So let me check it out if there's a resistance. Okay, there. On a daily time frame, there is a resistance right here. Right about there. Okay, that's basically the support for this price, but this is the resistance. This is the price where the bricks broke below, and this is the where the price gonna respect. It's gonna decide if it's gonna go down, but most likely it looks like it's gonna go down from that point. It's a strong zone. to be considering, you know. Option R there. So that's a right there. Okay, let's see what we got. Okay, W level 1, level 2, M formation. M needs to be worked out a little bit long. Yeah, I'm gonna wait it out. I'm gonna wait for the breakout, probably like this breakout, probably on a 1 hour time frame. Let's see. Yep, I'm probably gonna wait out for the breakout, guys. It would be better if you wait it out, but it's a clear indication it's a sell. But this is a major level, but I need a breakout for me to put a stop loss. That's the reason why I don't want to get in right now, because if I put a stop loss and it can go up, that's my problem, because that's why I don't want to enter right now. This is a here. All right, this is a peak of the first leg. This is a second leg. That's the stop point. This is a stop point. Price should not break this high, but it already did, went up, hit that daily mark, and then bounced it off. 8,400 was the range, I think. No, it didn't. So right about here. So we'll wait it out for the breakout to happen, and the moment it happens, we're just gonna sell this trade, okay? So make sure to put that down as a GBP AUD is a nice trade for a sell, okay? It's gonna be on a watch list. And then GBP CAD. Let me delete this, clear it out, and see what's going on. Okay, now the price, probably I sold it here. The price was supposed to reject, but GBP CAD, probably there was a last week, there was a news that hit the market really hard where everything went up. Like GBP CAD went up, and all the CADs or GBP news had a issue with it. But looking at here, the divergence is still valid, right? The divergence is still valid, and the pattern is still valid. W level 1, level 2. The clearest pattern that this is not clear, but this is clear. W level 1, level 2. So we're gonna be trading this right about now. We're gonna go back in again on a sell, and I don't even need this right now. But that's a divergence and rejection too. And it's at the strong rejection point at 70. So let's see what we got. Maybe ABCD. Maybe ABCD. Let's see. A to the B to the C to the A. Oh, okay. There. That's an ABCD pattern. Okay. ABCD is something like this. The price A to the B is the same length. If I copy this length right here and I place it right there, it's the same exact length. But you can choose Fibonacci extension, trend-based Fibonacci extension, and you just press here, here, and here, and you got the number. So based on the 100% retracement and the M formation and everything else, I'm gonna be selling this trade right about now. So resistance wasn't respected. It was respected for a little bit, but not anymore. But now we're gonna be trading based on the Fibonacci's, okay? So that's why it's important for you guys to learn everything as much as you can. Baby Pips is there to teach you all about technicals, and Market Maker is there to teach you all about MMM. And it doesn't hurt to feed your brain. All right, next. Let's see. Let me post the signal really quick. And my stop loss is very small because of the entry, right? And my take profit is so huge. And coordination, ooh, wow. Okay. Okay, 2,006, those are big numbers. 2,366 pips. The stop loss is 2,500 pips. And then 28, 30, 22, 23, 24. Okay, 200 pips, 2,000 micro pips is 2% risk, 0.01 on a $1,000 account. So now, what are you gonna do? Trade it. Now you're risking $20 to make what, 200 something? It's ridiculous. The risk reward is 1 to 11%. 1 to 11. That's a good risk reward. That's what I teach everybody. Like, have a good risk reward, have a good risk management, and you should be good. Okay. Sell GBP CAD, stop loss is 1.84300. Take profit is 1.56, no, 58640. Let me see why there is a number issue. 823. Oh. Okay, 587. Okay, GBP CAD. All right, give me a second. GBP CAD. Okay, stop loss is 84300. Take profit is 58. What is that? 587. All right, done. Okay, next is GBP USD. All right, now GBP USD was playing around, I think last week, where I was trying to do this. The technical analysis right about here. Price is making lower low, and that's the reason why I didn't trade this, because the M wasn't valid. As you can see, the M, this one was supposed to go here, then all this would matter. Now nothing happened, and the price is going back up against you. But if you traded based on the M and the trend line breakout, you got trapped. But there's no W divergence, nothing. The pattern right here is done. Like, there's nothing here to play with, to be honest. Like, there's nothing. I need to remove this, actually, kind of distracting. Okay, now here, this is the only part that worked. W level 1, level 2, M level 1, level 2, W level 1, level 2, level 3. That's it. After this, it played out once, twice, and third time. That's it. After that, it chop, 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 chop. That's the reason why I said, like, if you start to see market is making a chop, just leave it alone. Come back some other time when there is a clear setup. On a 15-minute time frame, ooh, on a day trading, you have so many setups every single day at the perfect session. You're gonna go crazy. But GBP doesn't have it, so on to the next one is NZD-JPY. So we're almost there, guys. We're almost to the end, okay? All right, here, daily time frame. Maybe 4 hours better. Okay, A top, level 1, level 2, V bottom. Those are the things, those are advanced stuff that I don't want to even go into that subject yet. But M, level 1, level 2, a W with a divergence. Okay, a divergence right here. Right here is a divergence there. Price went up, came back down, hit my stop to break even. Guess what? I'm gonna get back in again. I'm not scared of stop losses. It's break even stop loss anyways. But it showed me what the market was doing. It showed me what the market's gonna do. after it did the stop line. Remember the low, it needs to come back and hit that. So there was not enough orders, so they had to collect, come back all the way down, collect, and go along with the other banks. Banks and banks communicate. What do you think they do? They communicate, they go in orders together. He bought it, probably one bank bought it, two banks bought it, three banks bought it, went up. They notify the others like, oh, hey bro, like for an example, just a scenario I'm talking about, like, oh, I missed my entry. Okay, no problem, we'll sell our trades. Let the retail traders mess with their things. When the price drops, we all can buy in. And they all buy in, and that's when you see engulfing candles. All these engulfing candles are representative, basically represents the market maker trading. This is the indication right here. One big candle swooped the whole consolidation off. One candle, the whole candle swooped everything up. That's a 4-hour candle. You know, it's a big thing that you have to consider. Like, markets is shady. You have to watch out who you're trading against with, and once you figure out who you're trading against with and you know their strategy, it's game over. Literally game over. Okay, so moving forward, let's get on this trade before it misses us. Okay, so here, and the stop loss is 1,000 pips. Perfect. Take profit is 500 pips. That's 1 to 5% risk. And then this there. Okay, that's perfect. Go for an entry right now. By NZDJPY, stop loss goes 75,500. Take profit goes at 81.500. Analysis and dropped. Now, okay, that's good. All right, NZDJPY. Seven five 300 8150. Okay, take profit is 81.5. All right, done. Okay, next is NZD-CHF. All right, NZD-CHF is a harmonic pattern that's not ready though, but it's getting ready, almost there. So peak formation, this is the pattern that can go for like what? Here, W level 1, level 2, and formation, peak formation high, level 1, level 2, W, level 1, level 2, peak formation high with an M, level 1, level 2, and the W at the 88.6. Okay, 88.6 is the one that I was looking for. Okay, here. Cool. All right, so 88.6 got respected, and the price is heading to the upside, but the price has came down over here. Now, this is a level 2 that we're looking at. The peak is the low, right? The low is the W right here. Guess what happened? This price never break this low because it needs to respect the level. It needs to respect this level. That's why I say once this breaks above, the price breaks above the W, you're good. You're good right here. Right here. This is the price when breakout, right? This can be level 1, but this is a level 1. Level 2. Most likely the price is going to come all the way till the top. But we missed it. The entries are always supposed to be on the W or the level 1. Level 2 are not a good trade, not a good way to trade. So let it play out, let it go up, make an M, make a W, whatever that needs to do. And then when it does finishes, then you can enter right about here and fall all the way down. Okay? But until then, just wait it out. Okay, NZD CAD. All right, NZD CAD in a 4-hour time frame. What do you got? W, level 1, level 2, M formation. Okay, that's a daily time frame. Okay. All right, there. So W level 1, level 2, M formation, and the M formation didn't have to do at the 61.8. It looks like it's doing at the 78.6. Perfect touch to the top and a drop. And at the same time, it is a harmonic pattern. Right about there. That looks like a harmonic pattern. Yep. So leaving this, there's a trend line right here. If you are a conservative trader, you can wait for the breakout and you can trade, or you can trade now, have your stop loss here, and then have your take profit there. Okay, let me put that up really quick. There, that's an M. Here's a divergence that you're looking for. Here's another divergence that you're looking for. All right, now, just gonna go like that, just in case. Okay, now that's the trade you're gonna be looking at right about here. That's 1 to 4 risk reward, guys. 1 to 4. The take stop loss is 1.500. I'm gonna make it like that. Now I'm gonna make it 3635. 6,800. There. Now 1.5% risk to make 6.8%. That's a good trade. That's definitely a good trade. So we're gonna be trading that one right now. So we'll wait it out for it to drop, but it can go back up a little bit more. But that's most likely looks like a stop hunt to me. So probably a new. This is an NZD. So probably tomorrow. Okay, what's going on? Okay, now we're gonna sell NZD CAD. Oh wow, NZD JPY. Oh no, never mind. NZD CAD stop loss is 0.95150. Take profit is 0.86850. Okay. NZD CAD with the nice little harmonics. So harmonics needs to play out with the technicals with the market maker, everything. That's when I trade market technicals. Other than that, I wouldn't touch it. Let me see if there's a harmonic right there. Actually, there's not. But ADR is right about here on an NZD CAD. What? Oh, this is a daily. No wonder. Okay, the ADR is right about here. That's an average daily range. So the moment it touches here, most likely it's going to drop. If you draw Fibonacci, look at the 61.8. Right here, right there, right here. It was 30.2, but that right here. Okay, 61.8. Now, next would be NZD USD. All right, NZD USD. It was very interesting when I looked at this trade. So the pattern is there, everything is here, but then on a 4-hour time frame, there's a head and shoulder. Okay, head and shoulder with a retest. That was a retest, the breakout and the retest, and the price is going back up. No big deal for me because this is a short term up, right? Short term, it's going up for a short term only. It's not going up forever. It's only going up probably till here. That's it. My stop is above the high. So how I see things is this right here. This is my range. I would say this is my range of the level 1. This is my M. This is my range. It can play out. It can go back up. I don't care. As long as it doesn't go up beyond this level, I'm good. W, level 1, level 2, M formation. Everything is right here staring at you. All you got to do is wait. Wait for the pattern to go up. As you guys are not in this trade, I would suggest you to not even trade this because I looked at it last night. I was like, man, I have a feeling that this trade's going to open and then go back up right away. And that's what it's doing. It can go up another, what? Another 65 pips. But after that, it will drop. You know, after that, it will consolidate. It will do whatever it needs to do. It needs to drop. And then we'll count the levels again here. Right here. Okay, so all we're doing, another one right here. So we'll just wait it out. We'll see how it plays out. Most likely the level 1 is not even, now I see it on a daily time frame, the level 1 doesn't even look, it's there. Most likely it's going to be performed here. Maybe a level 2 here, maybe a lower low. It's going to go lower, even lower. As you can see, the price has made lower low. Now it might make another low. We'll just have to wait it, guys. Wait it out and see how it plays out, okay? NZD USD, option R. Okay, now what do we got next? Okay, almost done. Now it's done with NZD USD. Now we're gonna trade USD CAD. All right, a few more to go. Okay, USD CAD, we already sold it. So price looking good. Whatever that's gonna do, just let it play out. This is the perfect trade. Never miss out on this one. MAAWWVM. This is a perfect example. Take a screenshot if you guys want to. And that's how, this is the idle trade you need to look at. Idle, this is the exact MMM pattern that you always need to look at. Divergence, MMM, level 1, level 2. And for students who are here tonight, make sure to post your charts like this. Clean and crispy. You know, all you need to do is just mark up your levels, mark up your divergence. How clean is this? Just show me what you guys learning, okay? Now, moving forward, USD CAD is done. Now I'm gonna look at USD JPY. All right, USD JPY, it's, what's it doing that? Okay, their daily time frame, peak, level 1, level 2, M formation, level 1, level 2, W. Now the W, it's still a divergence. Let me move this around. It's still a divergence right here, okay? and there's a and this is still a divergence. So, and the risk reward is 1 to 9. So now on a 4-hour time frame, let me look into more. Okay, I kind of see it more. Chart. M1, 2, that's a divergence right here. Let's see this. Probably it's this one. Okay, there. You see the 100% how it came A, B, C, D? That's a A to the B, B to the C, C to the D, right here. And right here, it's like 1 pip by pip by pip. Right here, touched. Exactly touched, right there. That's a pip touch. That's a pip touch. That's an indication that the price will go up. And that's, I kind of give my trades to kind of play out. Basically, this is where I was looking for. That's the ABCD that I was counting from here to here, here to here. But if I look at here, that's much more better. But I'll cancel that one. I'll just use this one. That's the ABCD 100%. And most likely the price will go up. If it doesn't, then I'll just wait on a daily time frame for it to really push up. What I mean is do a reversal candlestick, engulfing, and then I'll buy in. But I'm still looking for a buy on this trade. USD/JPY is a buy, guys, but it's a matter of time and patience. Okay. Next is USD/CHF, and one more to go. That's it. Okay. And this is M, level 1, level 2, W, and I ended up buying right here. The prices keep going up. Now, I'm just gonna hold this trade till it goes up. That's what I'm looking at is 660 pips take profit. That's my zone. But it got quite a while to go, but no big deal. I'm waiting. I'm just gonna wait it out. And then probably that's a retest right there. So it's something to worry about. But since all the USD gonna go up, I'm not worried. And then XAU/USD here. Here's the 15-minute and hour chart. W formation, level 1, I think. Let's see where it is. I messed up the markups. I think it's on a different chart. But on a daily, on a bigger time frame, the swing trading, clean chart. But here it's getting all messed up. W, level 1, level 2, M formation. Here, more to the side, right here. The pattern repeats itself, guys. That's the thing. That's the funny part. People think the MMM pattern is hard to learn, but once you master it, it's not going to be hard. W, level 1, level 2, peak formation. I traded all this. That's why it's all marked up. I trade all this. From here to here, here to here. I traded all this. I gave a signal right here. I traded this all the way till here. I thought this was an M and I got out. But then I waited because of the resistance. I got out. I sold, I got stopped out. I never entered again. I just waited. And then I entered right on here. Then I booked my profit right on there because of the W. Like a lot of times you count your levels wrong, but the thing is you can count your level right with just waiting. You'll just wait and the price will tell you. You don't have to rush it. So the market basically consolidated and it did this thing. It just basically messed up here and then it cleared up right here. Okay, the price cleared up right about here. And if I'm okay, and a harmonic pattern. There's a harmonic pattern on, so okay, let's clear this chart up. It's kind of messy. Kind of don't like messy chart. Clean charts are always better. Okay, that's a support. That's a support for this. Okay, that's a resistance. This is a support. Okay. Now The harmonic pattern is right about here. Okay. Most likely gonna go there, but that's my harmonic pattern. Now, how do you identify a harmonic pattern? You just basically, right there is 1 and 2. So that's 100%, that's 161. Most likely the price is gonna go there. And at the same time, Fibonacci's. You draw this from here to here, 61.8. It's perfect. The perfect 61.8 retracement. Okay, and then after that, you do another Fibonacci from here to here. That's probably 88.6. Yep, almost there, but it's there. Maybe 78.6. Let's see. Yeah, 78.6. That's the number. 78.6 is touched. Now, this is, let's see, from here all the way till here, 61.8. So 78.6. Right about there. 61.8, 78.6. Most likely, 161.8. Most likely. That's the number I'm looking at. So, harmonic patterns, right here, right here, right here, right here, and right there. That's it. Okay, that's a harmonic pattern. So once the moment the price finishes, then I'm gonna look for probably on a 1 hour time frame. If this is a W, level 1 is this one, level 2 is this one, most likely the price is gonna go back up here and create the M. So this is the last pair, guys, so let's check it out, what it's gonna do. Right now it's not ready for a trade, but here is another entry that you can look for. So daily time frame, if you do the trend line, let's see, 4 hour, and then you drag it all the way here, there. So right about there, okay, right about at this intersection right there, where the trend line comes down, and that's a retest, a second retest, and then this resistance will be not broken. That's what I'm trying to say. Like, this resistance won't be broken. It will go down from here. Maybe a wick, maybe you might see a stop punch zone right here, but after that it will drop hard. So keep that in mind. Keep gold in your watch list, and then just lay it down. So I think that's about it, guys. I think I got all 31 pairs covered. Now let's get back to I'm just gonna go plain chart. So any question that you guys have right now is a good time to ask. So okay, hi David, do you use let me stop right there before let me stop the recording, or should I leave it? Actually, I'll leave it because a lot of people might have questions on the recording. So let me go through it. Hi David, do you use the TDI in higher time frames like this? Yes, 4 hour time frame, daily time frame, 5 hour, any time frame, you name it. I use it all. Okay, I use in every time frame. There's a divergence, I'll use it. There's a divergence here on a daily time frame, I'm gonna use it. Okay, TDI is something that's for the beginners. RSI is for advanced. So RSI is all you need, RSI and a divergence. But TDI does help you finding the what do you call it, the perfect entries, you can call it, like where the market spikes up above the Bollinger Bands on the RSI, and then you pretty much, like, it helps you out. But TDI is definitely a good one. I love it. I used to use it for day trading, but not anymore. This is Harrison. No, this is not Harrison. And then I'm not familiar with this method. A lot of people are not, because it's they probably have a technical background. This is a market maker method. What I'll do is probably Okay, what I'm gonna do right now, hold on a minute. Let's see. Let me think. Okay, it's very important for you guys to follow the risk management, but let me put the link out for the market maker method so you guys can, but I want to make my own video, not Steve Marr's video, but once it's ready, I would say. But if you guys want the course for market maker method, I would suggest you guys to hit me up directly. Okay, my Telegram username is at David Heiple, Heiple. Okay, so hit me up on Telegram. Just say, can you send me the market maker method video day 1, and I'll send you guys the first video. Okay, but before that, I want you guys to finish baby pips. So if you guys are here new to trading or pro traders, doesn't matter. Go to babypips.com, finish everything, start course here. Okay, how to trade Forex and all that. Once you finish this right here, start course. This is the progress. There's preschool, what is Forex, what is trade Forex, who trades Forex, when can you trade Forex, how do you trade Forex, then kindergarten, elementary. It's step-by-step process, guys. It's very clean, very fast forward to learn. Any question that you might have, you can ask me in here. And then after that, come to my DM and tell me, hey, I finished baby pips and here's my results. I need to see it, and then I'm gonna give you guys the MMM pattern or videos or whatever you guys need, okay? So it's a step-by-step process for you to be the better self, better trader, okay? Next, can you scalp or day trade with MMM? There's no scalping strategy for MMM, but there is definitely a day trading method on MMM. So on a 15-minute, all you got to do is go to the 15-minute time frame. But let me go to the trading view on my other chart. Let's see. This is a different one. No, let me go back. It's not it. Okay, chart. I think this is it. Yeah, this is it. Okay. As you can see, this is all 15-minute markups. Okay. This is a 15-minute markup. All this M level 1, level 2, W level 1, level 2, AAW, WVVM, all that. A lot of times you might be wrong. This is probably a whole W. This is a whole second level right here. You can count. It's common for you to count the levels wrong. Don't get me wrong, but it takes practice for you to be better. Once you practice a lot on hundreds and thousands of charts, you find your views easy. Now there's a divergence right here too. You can trade this on a breakout. You know, on a breakout you can trade it. So you can trade on a daily time frame. Okay, on a on a day trading. Okay, now seems quicker. What is the risk reward indicator? It's not an indicator, it's just a Telegram. I tell everybody to use Telegram, not Telegram, use TradingView, because it kind of saves your markups. You can come back to it, it will stay there. With MT4, it tends to remove it. So it's kind of frustrating. So a lot of people choose this, and you can just save it after you mark up the chart. So when you come back, it's still there. And the risk reward is just this. This that tells me the risk reward of how much pips am I catching and all that, the stop loss and all that. That's it. And then do you let the news play a factor when you're trading? Since I'm a swing trader right now, I don't pay attention to news. But if I am trading New York session, like day trading, like let me show you guys the charts. Maybe I have it. Okay, yeah. right here. So let's see if you guys can see this. Okay, there. So I don't know how you guys can see this, but there. Okay, perfect. There. All right, now you guys can see. So you guys see this calendar right here? This is my template, but this is a 4-hour time frame, so you might not see it differently, but where is it? Right here, the calendar right here is what tells me in 2 hours it's going to be news, in 3 hours it's going to be news. This is a whole template, the TDI, the basics. This is what I use on my laptop, and then and this is what I use on the computer right about here. So TradingView here on my computer, and then laptop I have a chart open, so I kind of do like multiple views on it. All right, now do the 2XA have to touch the upper trend line or vice versa for V for lower trend line? Good question. So let me get you a good example, and that would be let's see, let me find you a good example and show you. Okay, GBP NZD. Oops, it's here. GBP NZD. Do that, just the upper line. Okay, right here, right? So most likely no. Basically, you're counting the trend line touches. You're trying to create a support. When you connect dots, so this is what I say, like 1, 2, 3 eclipse. So here's a dot, here's one, correct? That's one. You know what? Hold on. I know. That's two. That's one. That's two. That's three right here, and that's four, right? So you're creating a zone to mark up your support. So there's two different kinds of support. A support that goes side resistance, and that's a support. And the another one is sideways movement. So this is a resistance, and this is a support. So the price can go like this. That creates a resistance, support, resistance, support. There's two different ways. Okay. Hopefully you guys understood what I said, but all right. So no, you don't have to have the touches as long you're counting the levels. Right here, these two don't have the touches, right? These two don't have the touches, right? It doesn't, but these are the levels. And who is Steve Morrow? Steve Morrow is my mentor. That's the person I give all my credit to, the person who I learned the skill set, the MMM. You gotta watch the first video in order to understand the whole concept. But hit me up after you finish the baby pips, and I'll definitely give you guys help, whatever you guys need with everything, educating yourself, moving forward in trading and all that, okay? So, hi David, could you share a tutorial to install MT4 and Mac? Thanks, bro. Actually, I can't do that, but you can definitely go to my my YouTube channel. I have a video. I believe I do have a video, or you can find it on the website www. Let me see, to everyone, put it www.forexempire.net. Okay, you can go there. There's a basic videos. I'm not sure if it's there, but if it's not, you can just Google it or YouTube it, and there's a bunch of videos that you can find how to download the MT4. Okay, it's pretty easy. All you gotta do is download Bottle Opener, or there's other apps that does it for you. Okay, any questions, guys? Any questions before I go? All right, so I'm gonna be ending the webinar, but Leave me comments right now how you felt about today. What do you guys learn today? Did did I did I teach you anything, guys, that you learned that you never learned before? And just put in your comment, put it in the comments in the chat room. Just put it in the chat room. I want to see what did I do that I can improve, and I can improve you guys at the same time. So come on, guys, put in the comments. There's 29 people. There was like 40, 50 people earlier, but now it's 29. Just put in what you think. What do you think you learned today? What Telegram you in? The Telegram, it's at Forex Empire at Forex Empire. I can put the link out in the chat room right now. Give me a second, in a bit. Copy link and to everyone, and then paste, and there. That's the link you can click, and you will be directed to my page. The group, pretty much. Learn much more. Thank you. Full knowledge. Learn how the market maker works. You will learn a lot. With Steve Morrow basic videos, you will learn a lot. I mean, I'm going over the advanced stuff. This is where the levels, that's where the ending part is, where Steve Morrow teaches you towards the end of the video, like in the 4th video, the 6th video, and the boot camps. These are hard stuff that you might not understand now, but if you go back to the videos that I'll be giving you after you finish the baby pips, you will open your eyes. You will be like, what did I learn today that I never learned before? It's gonna be amazing, guys. Trust me, I'm here to change your guys' life, at the same time help everybody out, at the same time help myself out. So where can we see the recording tonight of recording? It's gonna be uploaded on YouTube tonight. Probably I'm gonna download it and then upload it on YouTube. So if you follow me on YouTube channel, you guys can see the update, put on a notification, so once I post it, you guys can see it. If not, just go to my website or go to my Telegram. You can find my website over there. Everywhere, it's just go to my website. There's going to be a link for you to go on YouTube channel. So, all right, baby pips link. All right, Loso. All right, www.babypips.com/learn, I think. Let me click on it and find out if that's it. Yep, that's it. Now they changed it. Instead of school, it's learn. So babypips.com/learn, and that's where you need to click and then study everything that they offer, track your progress, all this. Like, send me the link of your thing, you know, take a screenshot, send it to me. Hey bro, look, I finished all of it. Now can you help me? And guess what? I'll give you one-on-one if that needs to be done. You know, I'll teach you guys one-on-one, but I need to see you guys are putting effort into trading in order for me to give you my time. You know, how much pips can you catch every month? It's unlimited, but the average that I tell everybody is 1,000. 1,000 is something that's average, but you can make 3,000, 2,000 pips. I mean, I have a friend who trades market maker method, and he catches 1,000 pips a week, sometimes in a day. But it's like he trades a lot of pairs, but he catches a lot of pips. Because if I go into, I'm going to be going into details in day trading the coming Wednesday. So this is swing trading right now, but day trading, I'm going to take it to another level. So I don't want to drag you guys for another, what, this is 2 o'clock? Yeah, this is a 2-hour webinar right now. So I don't want to drag it more, and I'm going to end the webinar so the recording is short. But Wednesday, I'll see you guys again with the day trading this time. Okay, day trading is a little bit different. It's fast, but it's exciting. You can see the market maker doing the moves at 12 at midnight in US session. Okay, New York session, London session at 12 a.m. PST. All right, so, all right, guys, how many pips? Best way to reach you? Best way to reach me is Telegram always. Okay. All right, guys. So I'm gonna end the webinar. It was a pleasure hosting the webinar today to teach you guys. I feel blessed, and I wouldn't be here because of you guys. I mean, you guys show support. So all I want is for you guys to just go and just recommend 3 of your friends to join my Forex Empire. Because guess what? I drop nuggets. I drop free analysis every single week that you can learn from it. Okay? Anyways, guys, I hope you guys enjoy the webinar. I hope you have a great weekend and a bullish weekend also. So everybody peace out and have a good night. Love you all.